Good morning, good afternoon, good evening. Hello everyone. Thanks for joining us for this webinar. My name is Puneet. I'm responsible for marketing for Finacle suite of products at Edgeworth. For this webinar, I am joined by my colleague, Mr. Rajshekhar Maya. Maya, as he is popularly known, has over 2 decades of experience in banking technology and has worked with clients personally in over 50 countries. And over the course of next 1 hour, we would be discussing what at Finacle we believe banks need to do to get their digital transformation right. And during this conversation, we'll spend time talking about what do we believe, how does digital businesses look like, what are the learnings bank can derive from them, and what are the 4 key areas they need to focus on. And we'll also talk about several examples from our client organization on how they have been able to get this right. This is going to be a silent webinar, so at the same time, we would urge you to send as many questions or as many comments as you have over the chat window. Please feel free to interact with us over the Twitter hashtag #TrulyDigital. We would be monitoring that during this webinar as well as post this webinar. And the recording as well as slides from this webinar will be shared to you post this event. So we're going to get started and we look forward to an interactive and informative conversation.
Thanks, Puneet. Good morning and good afternoon for the folks who have joined us, and thanks for your time today. And as Puneet mentioned, we are going to take the next 55 minutes giving you a perspective about what we have learned so far from the banks that we are dealing with globally, and as well as before that, what's happening for the other industries and which may have significant impact on the banking also. If you look at in last 2 years, digitization has really disrupted many industries. And we have taken 4 industries here just to give you a perspective of what is the extent of digitization that has disrupted these industries. The first and foremost is the hotel and the hospitality industry. I think most of us who have used Airbnb, which has more than 2 million listings as rooms on their website. They are present in more than 37,000 cities, and they are valued at around $25 billion today. The closest which can come from a brick and mortar valuation hotel perspective is JW Marriott. And what has it has transpired also in terms of forcing the big giants to consolidate. And I think most of us would have heard the news that JW Marriott has now acquired Starwood Hotels. The next industry which is getting disrupted equally is transportation. Uber, which has now more than 1 million drivers listed and subscribed onto their services. They recently conducted their 2 billionth ride, and they are present in more than 317 cities. And they are valued at around $68 billion today, which is like more than what the Ford and the Honda put together from a market valuation perspective. The third industry which is getting disrupted is the telecommunication industry. If you look at WhatsApp, which got acquired by Facebook a few months back for $19 billion. They have almost 1 billion subscribers, and they are leveraging the same telecommunication network provided by AT&T or AOL, but providing these services free of cost. Because of which, what the analysts used to think about that text messaging in the context of a telecommunication company is going to increase multifold, is going to be seen as a losses up to the tune of $350 billion every year for these telecommunication companies. The last industry, which is we have picked up, which is getting disrupted because of digital, is the retail industry. If you look at Alibaba, which today has more than 1 million products listed on their Taobao and Total Mall websites, and they are present in 217 countries, and they went in for a largest corporate IPO in the history of corporate world for $25 billion. Not just that, they are selling anywhere between an hairpin to a helicopter and getting into financial services and as well as technology offering. I will just explain the concept of Alibaba in the relation to in terms of what's going to happen to the banking industry. What surprised us is their Singles Day sale, which happens every year on November 11th. And in 2013, on a 24-hour basis, they closed almost $5.73 billion of GMV. In 2014, that got increased to $9.43 billion. And last year, 2015 November, they clocked around $14 billion of GMV, which is more than all the Cyber Mondays and Black Friday sales of all the eBays and Amazons and all the websites globally. More interestingly, almost 60% of their orders came from the mobile devices. They processed 710 million payments transactions that day, with a peak transaction of around almost 86,000 transactions per second, which again got processed on their own cloud environment called Ali Cloud, which processed at one point in time 140,000 transactions per second. They had almost 1.7 million delivery boys, almost 200 airplanes, 400,000 delivery vehicles to cater to that kind of a big rush. While numbers on one side, I think this is the kind of digital disruption that an entity like an Alibaba, which had no presence around 6-7 years back, today has these kind of numbers to talk about. I think those kind of disruptions are going to affect the banking industry as well.
What makes it quite interesting is a couple of facts which emerges, and there is a learning for all of us in the banking industry from this little story which you just shared. Very interesting fact in this year's sale was 68% of the orders came from mobile devices, and there were 43% orders which came from mobile devices last year. So if you see, we talk about the mobile first world, it's a quick reflection of that. In a single year, they saw 50% jump in orders coming from mobile devices. Again, because of the IPO, they became quite popular across the globe. But the fact remains, there's interesting data point which came in this year's sale. What they sold to international community, that is consumers outside China, in 24 hours last year, they could sell it in just 2 minutes. In fact, the management has gone on record to say that in coming years, they would have at least 50% of their revenues coming from outside China. I think the key learning which we have from banking is, it's once you get your business model right in digital world, you can scale it extremely rapidly. Most of the businesses which we discussed in last slide were not at all known businesses just few years back. And today they are global names. Second, any innovation, any new ideas which are emerging in any other country, it's important to keep an eye on that, because the same idea can be replicated by the same player or by a different player in no time in the country of the bank. So to me, those were the great learnings about digital businesses which all traditional businesses need to carry, including banking.
Absolutely, Puneet. Thanks for that update. In fact, the mobile devices that were used, you talked about, and the mobile app that was used for this sale, the same mobile app is also used to garner almost $100 billion of asset under management in China. This application is called as Alipay, and it has become the third largest asset under management company globally after Fidelity and Vantiv. I think you are bang on. This applies to even banking, and they have done that and proven that on the ground. While we spoke about one Airbnb for hotel industry, one Uber for transportation industry, and one Alibaba for retail industry, and one WhatsApp for telecommunication industry doing the disruption. But unfortunately for a banking industry, this current slide depicts that there are many more such Ubers and Airbnbs and Alibabas and WhatsApp trying to eat into the banking industry business today. You take one business element here, like a personal banking or a private banking or a wealth management or an insurance, you find minimum 5 such fintech startup companies trying to eat into the banking business revenues. And as per one estimate, the banking business revenues are going to be at risk, and this is going to be, they are going to lose around 73% of their businesses because of this. They're also going to be having a profitability risk of around 7 to 8% by 2019. Almost 83% of their bank assurance business and wealth management business is going to go out of their banking books. And they will also have a significant impact on their credit card and payment business, which is going to get affected to the tune of 25%. And this is a significant impact on the banking business, where banks are already experiencing the negative interest rates and as well as pressures on their margin. Having talked about this kind of a digital disruption taking in front of us in banking industry, we also looked at what is the ground reality. We found out that based on our survey, that not more than 30% of the banks have anything to do with in terms of a digital strategy in place, a systematic digital strategy. We found out that almost 69% of the banks that we interviewed, they don't have a systemic digital strategy in place, and that is a cause of concern when it comes to in terms of the challenges that banks are going to face going forward if they don't change it. At this point in time, I will just open up for the participants to look at the survey. And if you have any questions in between, you can ask the chairperson. But in the meantime, we request you to just respond to this survey. It is basically asking you a question around what do you think in your organizations, in the current context, the biggest barriers that is preventing you becoming or implementing a truly digital transformation environment in your bank, whether it's lack of unified digital vision or clarity of who owns digital or existing legacy technology. I leave it to you, and please go ahead and vote. And in between, if you have any questions, we'll be happy to answer that as well.
Maya, we have the first question coming from Mike. And the question is, could you quote a few examples of how banks are collaborating with fintechs to create greater value?
Very good question, Puneet. Yes, we have seen that at least the top 5 banks globally, they have invested in many of the fintech startup companies. And banks like BBVA in Spain, they set up around $100 million innovation fund just to look out for interesting fintech startup companies in Silicon Valley. Similarly, we found out that last year, National Australian Bank in Australia, they have set up around 50 million Australian dollars just to look at these fintech startup interesting companies for them to ally with and take it forward. Not just that, we have found out that banks are trying to partner. In fact, last year's EFMA and Finacle joint survey, we found out that there are 3 stages where banks are trying to look at working closely with the fintech companies. One is trying to invest in them. The second one is trying to partner with them. The third one is, yes, banks have a business idea, but their legacy environment is not allowing them to translate that into an execution. So they are trying to give away those ideas to fintech startup companies and ask them to come out with these products and solutions so that they can integrate that in their environment. I think this is what we have seen globally from the perspective of alignment. I think the survey results are out, and it's very interestingly in tune with what we have also found out in our interactions with global banks. Almost 88% of the respondents are talking about, yes, there is a lack of unified digital vision across the organization. Many times we have also found that it is going to be a siloed approach or line of business approach or one department taking a view about the digital. The second most important element, which is the legacy technology environment, I think this is, in fact, has come out as one of the strongest barrier that we have seen in global banks that is preventing them going from digital environment. And of course, the budget in current considerations where there is a hit on the margins and a hit on the profitability. So interesting perspective. With that, now let's look at in terms of understanding what is truly digital banking means. We also posed this question to some of our banking customers and as well as the global banks. We found out that when we asked the question about what do you consider as a truly digital, some of the banks came back and said that, yes, today we are present in branch and we have ATMs, and if we're going to add an internet banking or a mobile banking channel, then we consider ourselves as truly digital. Some of the banks went ahead and said that, yes, we already have these channels, but whenever we go and add new capabilities, new financial transactions being delivered on those channels, I think we consider ourselves to be truly digital. They said that old banking business models being linked with some automation on top of it and trying to create a workflow. I think, unfortunately, we have to tell them that none of these count for a truly digital environment. There are incremental approaches, and it is not going to enable or empower banks to compete in the changing dynamics of the emerging world. So in that case, what is truly digital? So based on our interaction, research, survey, and validation, we have found out that there are 4 key characteristics that any bank needs to adhere to claim itself to a truly digital bank. So let me now go to each one of that. The first and foremost is basically the customer is in the middle of everything. So we talked about Airbnb, we talked about WhatsApp. In all of these disruptors, customer is in the central focal area. So around him, all the experience has been created. I think that is where it's very important for us to look at as a banking industry, how to make sure that we move away from a product-centric approach to a customer-centric approach and going forward a customer-specific approach. So we have at least known that almost 50% of the global population is less than 30 years of age, and 96% of them are already connected in one way or the other over the internet, social media, social networking. This is the most connected, collaborated, opinionated, educated generation in the history of mankind. And of course, because they are digital natives and they are born with some of these capabilities, they demand convenience. Whatever is offered by Uber, they expect a similar service in the banking environment. They need speed. They need personalization. We have found some of these millennial customers who are not ready to wait for burgers for 30 seconds in a McDonald's joint. They cannot wait for half an hour in a branch to get service. So that is the kind of expectation which is coming in from a cross-industry relativism. And from our own approach, based on the work that we have done with the global banks, we are looking at suggesting and providing capability for the banks to look at to be in their books, the customer books. Banks have to continuously innovate. And this requires a very agile platform in the back end, which provides that kind of a capability for every bank to go and innovate. More importantly, these customers expect a common and a unified and a seamless experience using an omni-channel. It cannot be now called as a multi-channel. It cannot be multiple channel approach. It has to be a comprehensive omni-channel with a channel context and a channel hopping capability being provided on that. And more importantly, while more and more things are becoming digital, there is a challenge of some of the security and frauds also coming into picture. So in the name of security, we don't want to compromise on the experience at the end side. So it is sophistication on the outside, and more importantly, the simplification on the inside of the bank is very important when it comes to security. So having talked about that, what really is frictionless banking, which is basically trying to provide an Uberification of a banking experience or an Airbnb equivalent banking experience. We'll just look at a video which provides you the context in terms of what exactly is that.
What if you never had to choose between good user experience and robust security? What if you could get both all the time? What if you could onboard a customer remotely? What if your customers could sign in by just looking at your app? What if your customers could transact by just tapping their smartwatch? What if your customers could authenticate and approve transactions without ever having to remember a password? What if all this is just the beginning? Get ready for the frictionless banking experience.
I think that was with respect to what can happen when it comes to in terms of using technology and leveraging it to deliver a frictionless banking. And that gives a perspective around death of a password. So everything can happen through a kind of a biometric and a facial recognition, and so that nobody needs to remember the PIN and the passwords and the OTPs. Moving forward, the second and the most important element that is required to become a truly digital, and this is what has proved in the case of the other company that we talked about earlier, is the ecosystem. Instead of banks working in isolation, they have to make sure that they bring in the comprehensive ecosystem and the partners together to deliver that what the end customer wants. Today, we have seen that there are a lot of fragmented services being offered, and the customer is not getting that one solution approach while he's getting sold a product approach. And more importantly, this requires banks also to open up in their environment when it comes to in terms of exposing their APIs, exposing their ways of doing businesses, so that a lot more community, the collaborative approach and the partner ecosystem can come and contribute and enhance your value. From our own recommended approach perspective, we suggest that the banking platform has to be a lot more open API enabled, and this is where Finacle comes into picture in terms of being RESTful API open solution. And the solution has to be a lot more open standard and open systems based. This is where compliance to the standards that is globally existing and emerging is important. Standards like ISO 20022 for the payments transactions, standards like BION for the processes, standards like IFX for the inter-exchanges, and many other standards which bring in that kind of a very seamless way of integrating, exposing, and consuming services so that you become a lot more open. If this is not happening from the bank's perspective, there are already regulations waiting outside. For example, in Europe, there's a Payment Service Directive 2, which is called as the PSG2, which will impose and expect banks to open APIs so that the rest of the community can be leveraging that and providing apps on top of it. One of the important things that today banks are not leveraging is the networks. Today banks have connectivity to the suppliers and the vendors, their customers, their SME customers, and their corporate customers, but they are not leveraging that benefit of the network and the network of network effects. And this is where banks can leverage the data, the information, the transaction capabilities, and use that opportunity to generate business avenues. Let us now go to the next video, which gives an indication in terms of how to leverage these kind of networks to deliver banking business.
Online shopping. People love it. And why not? It's fast, convenient, and easy. According to a recent survey, 85% of the world is shopping online. It makes perfect sense then for a progressive company to get online and connect with its customers. Small and medium businesses, in particular, will benefit immensely from an effective online presence. As a bank, how can you help your SME customers reach this goal? Presenting the EdgeVerve Commerce Network, a solution that helps your SME customers create and manage their digital presence and sell their products and services online. It also helps them network with other businesses and build an ecosystem. Let's see how this works. Samantha is an art and craft dealer and also one of your SME customers who would like to be present online. With the EdgeVerve Commerce Network, your SME relationship manager can lease out space to her. This becomes Samantha's online store, and she can use the platform to fully customize the store to meet her specific business requirements. The solution uses advanced analytics to provide rich insights to Samantha, helping her make targeted offers to visitors on her digital shopfront. What's more, all the payments done on this portal route through you, thus earning you additional revenue. The platform allows you to deeply understand the business of your SME customers, so you can customize your offerings for them. And that's not all. Here is the truly disruptive power of this solution. Since this is your mall, you can reserve some space in each store for your bank's offers. This helps you to engage with the people who visit your SME customer's store, so you can acquire new customers and sell more products faster than ever before. Go ahead and build stronger relationships with your SME customers and help them accelerate their online success with the EdgeVerve Commerce Network.
Maya, it's an interesting example. There are a variety of ways we have seen the banks are setting these networks. You would recall 2 years ago at BI Infosys Finacle Global Banking Innovation Awards, one of the winner was Idea Bank from Poland. And what they had essentially done was they set up a Idea Cloud essentially for the small and medium businesses clients, wherein they put together a set of ERP applications which typically small and medium enterprises use to run their businesses better, and obviously integrated their banking services into those applications so that all their customers can not only do just banking but manage their business more effectively. And outcomes were tremendous for them because they had much deeper insight on their customer business, as well as leverage that insight to offer more tailored solutions and in fact increase stickiness with their customers manyfold. And there are several such examples, like Deutsche Bank is creating a similar SME hub where they're enabling business between multiple SMEs by creating that network. So it's all exciting world wherein the banking is going to be a lot more than what we have seen in past.
Absolutely, Puneet. And even BBVA in Spain, they have exposed in their portal all the APIs that can be used and consumed by the ecosystem to bring out new innovations, new apps, or take it to integrate that with their general ledger in the back-end host systems. I think, as you rightly mentioned, there are a lot of interesting avenues and opportunities for banks to look at these APIs from an open economy perspective. With that, now let's move to the third imperative, and more importantly, this is from the perspective of the insights. Today, if you look at, starting from the civilization and up to the year 2003, whatever data that was created globally, and the entire data has been created more than that in year 2015 alone. And that is going to be taking just 1 second to create in year 2020. That is the kind of enormous data that the world is creating. And banking institutions are the only entity today globally which has a lot more information about the customer compared to any other industry. The previous 4 industries that we talked about, in the hotel industry, transportation industry, retail industry, or the telecommunication industry, whenever any financial transaction happens on any of these industries, that data resides inside the banking environment. But unfortunately, banks are not able to convert that data into useful information, that useful information into a good knowledge, and that good knowledge to convert into a wisdom to see what should be done for the customer. So it's very important. These insights are generated based on the data that the banks have already sitting on. And this requires not just doing it for the MIS purposes or for the management purposes, but it has to be used to empower everybody in the organization. And this is where our recommended approach is. There's a lot of capabilities to harness the existing data, which is already static and structured. With that, you bring in the unstructured data, which is a lot more happening on the social and social networking sides of your customers. So why don't you harness both of that using the power of open source and use that big data to generate a lot of actionable insights. Simple things like the right product to the right customer, the right price in the right channel is very, very important to go to look at those kind of analysis. And in Finacle, we have leveraged this kind of expectation and provided a ready-to-use with more than 40 business use cases, which can be leveraging the structured and unstructured data of the customers and the products and the branches and the performances and the ATMs, and that can be readily taken to implement some of the actionable insights that comes out of it. The whole solution stack is available on Hadoop and open source, and which will be useful for the banks to look at from a perspective of total cost of ownership also coming down. What I want to do is I will play the next video, which is going to be providing the understanding of what it means to be in the truly digital world from a perspective of using the analytic solution.
Data-driven insights are the lifeline of your business. It's not a surprise that 68% of banks have invested in big data solutions. However, 65% of organizations are struggling to get value from their investments. One of the big reasons is banks are tied down with generic solutions that are not designed to deliver industry-specific insights. Presenting the Finacle Analytics Solution, an advanced analytics solution that integrates banking data models and open source technologies to deliver contextual insights for the banking industry. With our range of pre-packaged business scenarios, you can sell personalized products, minimize risks and fraud to contain losses, increase operational efficiency. What's more, you can create new business scenarios based on your need within days instead of weeks. With Finacle Analytics, you can analyze data from any source in any form. The solution's predictive modeling capability gives you actionable insights at the right time to make the right decisions. Finacle Analytics is instant and delivers real-time insights. With its self-service options and intuitive visualizations, the solution can be used by anyone within your bank. What's more, the solution runs on non-proprietary hardware, so you get more value from big data at a fraction of the cost of proprietary solutions. You can deploy the solution in less than 8 weeks as a standalone big data solution or as an add-on to existing proprietary tools. Give everyone in your organization the power of fast, contextual, comprehensive business insights. Embrace the big data revolution and create a strong, insights-driven business with Finacle Analytics Solution.
That was interesting, and let me come to the fourth and most important characteristic of a truly digital bank is in terms of the automation. The automation is not just incremental, it's a comprehensive and ubiquitous automation across the organization that helps the end consumers, internal staff, and the partner ecosystem. But unfortunately, we have seen that there are a lot of frictions inside most of the banking organizations, and they are not able to leverage the technology when it comes to in terms of improving efficiencies and productivity. And at the same time, there is a lot of repetitive tasks that are being carried out humanly today, which can be completely handed over to the machines. So here is what our recommendation. We have built a lot of artificial intelligence and self-learning and machine learning application, which leverages most of the data that is being there in the banking environment, and once it learns, it completely hands it over to make sure that it's automated end to end. Apart from that, most of the banking processes, they are today either broken or they are following in terms of a traditional way of doing the business, which is a lot more paper and labor intensive. And this is where the introduction of the robotic process automation that can bring in that efficiency that the banks are looking at to improve their margins, improve their the productivity. And one of the key trends that we are observing in last 6 months, banks are looking at now leveraging the blockchain, which can bring in efficiencies, transparency, speed, agility, and more importantly, build the trust in the transaction life cycle. So with that, let me now go to the next video, which basically gives you perspective about how blockchain can be leveraged to do many more things.
In just a few short years, the world has gone from blockchain what to blockchain wow, changing the world as we know it, one blockchain at a time. $20 billion. That's how much Santander Bank estimates banks will save on infrastructure costs with blockchain technology. Barclays has already announced they're undertaking 45 experiments on this technology. What about you? Are you leveraging blockchain yet? You can now. With the EdgeVerve blockchain framework that's tailored exclusively for financial services. The EdgeVerve blockchain framework accelerates the creation of blockchain-powered networks by offering a broad range of services. It is a permissioned ledger so that you can run your business with utmost security. It is asset agnostic and extensible so that you can transfer any kind of asset within the network. Finacle's research arms in Ireland and India including several blockchain black belts, are collaborating with our global clients to create blockchain-powered next-generation networks in the area of trade finance, payments, smart contracts, syndicated, and corporate loans. We invite you to begin your blockchain journey. Join us to form a community network. The next-generation banking ecosystem awaits our partnership.
Before I proceed, I see a question there in terms of from Gabriela saying that what are the top 3 use cases that the banks can leverage blockchain? Very interesting question. In our interactions with almost more than 50 banks in the last 6 months, we have come across that banks are looking at the top 3 from the perspective of blockchain utilization. One is the payments and remittances transaction. The second one is trade finance transaction. And the third one is the identity services, which is nothing but know your customers and know your customer policies. I think these are the 3 topmost use cases that we are witnessing in our interaction with the banks. But apart from that, the banks are also looking at leveraging it for syndicated lending, then extending it to invoice financing and many other areas. I think blockchain has the disruptive power that it can bring it to the banking networks and in terms of the automation going forward. Having talked about that, when we looked at the reality in terms of how many banks today have real capability of going ahead and looking at becoming a truly digital, to our surprise, we found out that almost 84% of the bank's IT budgets are being used only to keep the lights on, just to run the business as usual. And unfortunately, they are left with less than 15% of their IT budget annually to look at doing something innovating, doing something creating, bringing in some kind of new products and solutions and services. And this situation is very alarming compared with the other industries that we talked about. So considering this, and also the reality that banks will not be able to now go ahead and do rip and replace big banks, one night, all branches, all customers, all accounts, and all users being moved into a truly digital environment, we have found out that there is a mechanism of looking at how to come to terms and in the journey of becoming truly digital, they can adapt themselves. And this is where the truly digital strategy from the perspective of implementing renew and new, which we call internally as a dual strategy, is very, very important. While the banks can renew their existing core environment, the backend legacy systems, and at the same time, they should set aside to bring out new innovations, working with the ecosystem, bringing in the partners, making sure that you are able to leverage the latest technology offerings, and with the continuous culture of learning, creativity, and with the purpose of banking business. I think this is one of the important strategies that we have seen working out in many of the banks, and we are going to cover some of those banks' use cases going forward. With that, let me now take you to another survey question. And this survey is looking at in terms of provided a chance, and today you have now faced with a lot of challenges. What will be the technology that the emerging technology that your bank is going to invest right now or already started investing and researching around it? Is it going to be blockchain? Is it going to be in the area of advanced analytics and big data or cognitive computing or mobility and wearable or open APIs or the cloud itself? I request you people to go ahead and vote yourself. And in the meantime, if any of the participants has any question, please don't hesitate to ask us. So if we have answers, we'll obviously provide that answer now, or we'll make sure to it at a later point in time.
Maya, we have one more question from the participants. This question is around API-based banking, which we just discussed. And the question is, if banks were to open up all the APIs, aren't banks accelerating their future towards becoming a utilities?
Very interesting question, Puneet. I don't think that banks have to be worried about it. See, around 3 years back in 2013, when we published our banking trends for 2013, one of the trend, if I remember correctly, the fifth trend that we talked about was banking is going to be the operations of gang of four. We identified four industries coming together to make sure that the banking becomes a lot more relevant. The first and foremost is the banks themselves. They are good in manufacturing products and their domain and the risk management. They should concentrate on that. They can now look at the retailers selling their products and doing the after-sales service. Telecommunication companies doing the processing and the hardware and networking and security and data centers management and things like that. And the fourth is the technology companies providing the platform for the banks that is required to innovate and offer the products in a much more agile way. So these are the four, what we call as a gang of four is going to rule the banking going forward: the banks, the retailers, the telecommunication companies, and the technology companies. After 3 years, around 10 days back, we saw an announcement by Amazon, which is going to now sell the student lending products of Wells Fargo. I think what we predicted in 2013 is coming true now, where Amazon is selling on their website the student lending products of Wells Fargo. And like this, it will just augment. The banks are going to amplify and augment their presence and become a lot more relevant and contextual to the changing demography and changing customer expectations. It is not just going to be utility company. Utility company is going to just take, for example, in our assessment, processing of your transactions, but the domain of the banking and the business of banking is going to remain with the banks. So that's what I wanted to answer. Having answered that, I think the results of the survey is in front of us. More than 50% of the audience is talking about blockchain is going to be the technology that they would like to invest this year. And the next, there are ties between analytics and big data, and of course, open APIs. I think very important observations in tune with what we are also seeing globally in the marketplace. So let's move on in terms of providing you in terms of how Infosys Finacle can help banks in this journey of becoming truly digital. So as you're aware, we are a part of the 9.5 billion global conglomerate, which is in the consulting and technology services. And we are the product unit of Infosys. Finacle is the product suite, which is being used by more than 190 banks in 94 countries. Today, we have more than 848 million customers on Finacle, with more than billion accounts being on Finacle. We touch almost 16.5% of the global bank population in one way or the other every day through Finacle. That is 1 out of every 8 person globally. From a solution offering perspective, we have an end-to-end comprehensive universal banking solution, which includes very well recognized core banking solution and highly scalable and recognized internet banking and omni-channel solution suite, which includes internet banking, mobile banking, and the branch. And then we have the CRM, the enterprise capabilities around payments and liquidity management, wealth management, treasury, origination, Islamic banking. We have a whole suite of around 20 such solutions coming as part of a global universal banking solution to you. While we have this kind of offering and the numbers to talk about, we're also being recognized and endorsed by the analyst community for the last several years. We are the only vendor globally who's been on the Leaders Magic Quadrant, Leaders Quadrant for the last 9 years continuously. Similarly, we are the only vendor who's been on the Forrester Wave Leader Quadrant for almost 6 years now. While these are the recognitions for our core banking, we also have recognitions for many of our other solutions, including our Omni-Channel Hub, which has been shown on the right-hand side of the screen, which is the Forrester assessment of Omni-Channel Hub, where we are in the leaders circle on Forrester Wave. So having talked about that, let me now go ahead and give you some perspectives around how some of our customer banks have leveraged Finacle platform to be relevant in the digital world and also excelled themselves in that journey. This is the example of a bank based out of India called ICICI Bank, which is the second largest bank in India in terms of the asset size. They started their journey with Finacle. And when they started their journey, they had less than 2 million customers. Today, there are around 60 million customers. And they were around less than 100 branches. Today, there are more than 5,000 branches. Of course, the data is of 2015, but if you take the data of 2016, the numbers of branches have increased. And from anywhere between less than $10 million of asset size, they are today more than $103 billion of assets. And of course, in terms of the income growth, also has been substantial. This bank has won almost all the awards when it comes to innovating, using the technology and leveraging. And most interestingly, this bank's IT costs are anywhere between 10 to 15% of their global peers. So they're spending only 10 to 15% of the IT costs of their global peers, but they're able to now innovate and keep innovating every year. They have many of the solutions offered along with the launches that happens in the technical world, whether it is Windows banking when the Windows 8 was launched, or pockets using the Facebook banking, and many other things, digital wallet and things like that, they keep offering so that they become relevant and contextual, and that takes care of their growth aspirations as well.
Interesting.
We talked about one of, yeah, Puneet.
No, I was just adding that it's very interesting that if one has to see their series of innovations which they've launched only in 1 year, it's really outstanding. If you just look at 2015, in one single calendar year, they refreshed their core banking solution. They launched an open wallet solution which was subscribed by a couple of millions of consumers in the first month itself. They launched, iWatch the day the watch was announced. The same day they launched their iWatch banking, and of course, they had further enhancements in multiple omni-channel applications. So it's incredible the pace at which they are able to innovate, and that's the mantra by which they have been able to have industry-leading growth, which is reflected in the numbers which we see on the slide.
Very, 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 very good, Puneet, for bringing it out. In fact, if you look at their transaction mix, way back in 2001, almost 87% of their transaction used to happen from the branches. Only 13% of the transaction mix used to happen from the channels. Today in 2016, if you look at, almost 90% of the transaction mix happens in non-branch environment, that is through internet banking, mobile banking, call centers, and ATMs. Only less than 10% of the transactions happens inside the branch, and those transactions are also only in the area of marketing and advisory and things like that. So how they change the transaction mix to become relevant and adjust to that growth is a very incredible story, as you rightly mentioned, Puneet. Thanks for that. Continuing with the examples, while we talked about a bank which has grown tremendously, here we have three institutions, a combination of a bank and an e-commerce company and a traditional post office services company. Zuno, which is a subsidiary of a Raiffeisen Bank Group in Austria, during the financial crisis in 2008-2009, they couldn't open and expand their physical presence and physical branches. They decided to go ahead truly digital. So their approach was to make sure that they have internet-only bank. That means a comprehensive direct bank, no branches, no physical infrastructure. And that has become so successful that they have more than 800,000 customers today, and they have more than €1 billion in deposits in just 2 years of experience. And they are also able to save lots of cost compared to a brick and mortar kind of situation. And the success has given them the confidence, and they have launched it in many other countries in a similar fashion. While that is a traditional bank looking at a business model which is completely different and an innovative way of looking at attracting the customer, there is another entity called Paytm, which started off as an e-commerce player and a digital wallet service provider in India. Today, they have more than 120 million subscribers, and they have a plans of acquiring more than 500 million subscribers in India alone by 2020. It's a phenomenal growth, 120 million, compared to a bank in India which took almost 150 years for them to acquire the reach, the 100 million customers. This entity has done it in 36 months. And more importantly, this entity has been now followed up and invested by many of the leading companies, including Alibaba from China. They think that India is the next growth perspective after China, and they want to make sure that they're ready for that. So they're bringing in all their capabilities and skills and the technology know-how and implanting that into Paytm so that they can enter in a much more sophisticated way into the Indian market through Paytm. And recently, Paytm also got their payment bank licenses from the Reserve Bank of India here. So they'll become a full-fledged payment bank in no time. The third example that I wanted to quote is an 150-year-old institution which majorly was into postal services, and they also had postal savings bank and insurance products. So they decided to go digital, and this entity has more than 150,000 branches, more than 200,000 users, more than 200 million customers. So they have selected Finacle, and they have already gone ahead and transformed themselves. Recently, they also got a payment bank license from the Reserve Bank of India. So they're also going to now launch many other solutions along the Finacle. So it's basically giving a perspective in terms of you need not be a startup company or a startup bank to leverage to become truly digital. In whatever stage and whatever life cycle that entity can be, if they decide and there are enough capabilities in the technology platform, they will leverage and they can go ahead and make sure that they are successful in that journey. The next case that I wanted to talk about is a bank, which not a startup bank. Again, it's a traditional bank, a Discover Financial Services, DFS in the US. When they decided they want to do something different, they didn't have to do much changes from the perspective of their business model, but think innovatively of making sure that they are going digital. This bank has decided to launch their internet-only bank. That means all the 50 states customers can now open deposits and borrow from this online banking environment. And this has changed the landscape of US banking. While they have not only gone ahead with online real-time banking platform in the US, but at the same time, their businesses have significant growth when it comes to in terms of improvement in services, efficiencies, and productivity. If you look at from their existing processes of more than 20 when it comes to account opening, they have reduced it to 6, and that is where it matters to improving the customer experience. And the customers also now able to open and do transactions with 40% less and fewer clicks. And that gives the time saving and as well as the efficiency for the end consumers, improve the customer experience. Their account servicing costs have dropped almost 2/3, thereby giving them the money back, which they can invest in innovations and launching new products. And of course, the interfaces for the customer services agents who are going to serve the customers have come down from 20 to 1. I think that is the significant in terms of bringing in the least disruption to the end consumer, least disruption to the end user of the bank, but at the same time leveraging technology. And there today, more than 3 million customers with more than 80 billion assets in size. I think this gives a clear indication that even a bank of that nature can really think and take off innovatively to market dent in the market like US. With that, we'll come to the next survey, and this is where we are now looking at asking a question around which are all the application areas that your bank will prioritize to modernize, to become and start the journey of truly digital. Is it going to be investment in omni-channel, core banking, or payments, analytics, and things like that? I request you to go ahead and respond to this survey. In the meantime, anybody has any questions, so they can just post it to the chairperson of the moderator. We will try to answer that.
Maya, we have one question from Dan. This is regarding digital strategy for business banking. The question is, what do we see as the top business customers ask for the banks? I think we covered quite a bit on the retail banking customer perspective, and I think this question is around business banking customers. What do they expect from banks today?
Very interesting question, Puneet. Today, if you look at globally, almost 70 to 80% of any country's enterprises are contributed by the business banking, which is the SMEs kind of business. They also contribute to the more than 50% of the employment opportunities in these countries. And this goes up to almost 70 to 80% in countries like Germany and UK and South Korea. And they also contribute to almost more than 40% of the GDP of the country. Even in US, out of the $15 trillion, 40% of comes from these business banking and the small, medium enterprises companies. But unfortunately, they don't have access to the formal financing in many countries, and they are not able to generate funds elsewhere like a large corporate. So there are opportunities that we see from the banking perspective that this business banking can be leveraged to lend more. One of the examples and the videos that we showcased earlier was to make sure that helping as a bank in their journey of becoming digital. The business banking customers themselves can leverage technology to become digital, and that can happen through the bank. Banks can open up a shopping mall equivalent on an online environment, rent out those spaces, make sure that you have templates and capabilities provided to them, and they should be able to now interact with the network of the suppliers and vendors that is there in the bank's environment, and as well as banks should be able to now leverage the data and including all the payments transactions passing through the bank, and they should be able to now get insights of the transactions and make relevant offers to the end consumers of those business banking customers, and as well as to the business banking customer. So there are a lot of opportunities that as we see going forward, and also leveraging blockchain, they should be able to automate end-to-end when it comes to the business banking customers. So results, very interesting, and it's in tune with what we envisaged. Banks are now looking at investing in analytics and derive those actionable insights. The next highest rating comes for the mobile and wearables, and this is where basically in terms of being relevant to the customers and delivering more and more services on the latest gadgets. So the next one comes is in terms of the omni-channel to provide a unified and a common view to the end customer. Very interesting insights. So with that, we move on in terms of helping the banks and telling the audience that, yes, this is the right time for the banks to go digital. And you have a partner in Infosys and Finacle who have done this journey along with some of our customers and the case studies that we talked about. We have the required experience and the tools and the solutions so that the partnership will help you becoming and scaling that kind of a journey and effectively competing in the changing dynamics of the marketplace.
We have one more question coming in from the audience, and the question is, and I believe it will be the last question we'll take today, considering the 2 minutes we have at hand. A question is, a lot of banks are creating new digital banks. What do you think of that strategy?
Very interesting question, Puneet. I think while it has a long answer, it is driven by, to some extent, by the regulation also. If you look at the Banking Committee for Banking Supervision, the Basel Committee for Banking Supervision, BCBS 239 circular, that has identified post-financial crisis around 30 globally systematically important banks. If they go down, the economies will go down. So hence they have requested the central banks of these countries to make sure that these 30 big banks, either they are broken down and to make sure that they are leaner and meaner, or they have to set aside more than 3.5% additional capital, which runs into trillions of dollars. So what some of these banks are trying to do, they are trying to adopt two strategies. The first strategy is to become leaner and meaner. They're trying to create bank in a bank. That means you create a brand new digital entity inside your bank, which can now look at taking the new customers, retail banking business, ring-fencing the retail banking business, in that of the investment banking business and insurance business, and slowly start acquiring new customers on a comprehensively new platform, comprehensively only digital, direct banking, and then slowly move the existing legacy to the new environment. So this is where banks are trying to now not only comply with the regulation, but at the same time becoming leaner and meaner, and also looking at attracting the new customers with the new technology. The second set of banks, to cater to the compliance expectations, they are selling away their businesses, which is not core to their businesses. You have seen that happening for Royal Bank of Scotland, the Citibank, the Barclays, the HSBC. All of them are existing businesses, existing countries, so that they become leaner, meaner, and comply with the existing regulations. So it is the business model evolving. There's nothing right or wrong. I think it all depends on in terms of the expectations and the challenges that each individual bank have. But going digital is going to help these banks in terms of not only compliance perspective, but also making sure that they're relevant and contextual to the changing customer demand, marketplace, and as well as effectively competing and collaborating with the fintech companies. I think that should be the answer, Puneet.
Thanks for that, Mayan. I think we had quite an interesting session, and thank you everyone for joining us and sharing your thoughts as well as putting in your questions. In case you have further questions, you could reach out to us. We would soon be sending a feedback on this webinar. We would urge you to take those 2 minutes to reply back to us. And in that mail, you would also have an option to choose to have a consultative workshop with the Infosys Finacle team in your bank. So feel free to opt for that. Once again, thank you for joining us today, and have a great day ahead. Thanks and goodbye.